On November 7th, 2022, one of the world's largest cryptocurrency exchanges appeared to be functioning normally. Customers could see their balances, they could place trades, and the company's billionaire founder insisted their money was safe. 4 days later, FTX was bankrupt. Billions of dollars belonging to customers were missing. But this was not simply a bad investment or a company caught in a collapsing market. A jury would ultimately find that the man behind FTX had been secretly using customer money to finance another company, purchase investments, acquire property, and expand his influence. And for years, almost nobody outside his inner circle knew. The story began with a trading firm called Alameda Research. Sam Bankman-Fried had studied physics at the Massachusetts Institute of Technology. After graduating, he worked at the trading firm Jane Street. In 2017, he helped establish Alameda, a company designed to make money from differences in cryptocurrency prices. Crypto markets were fragmented. A coin might sell for one price in the United States and a much higher price in Asia. Alameda attempted to profit by buying in one market and selling in another. Bankman-Fried presented himself as someone who wanted to become extraordinarily rich for an unusual reason. He associated himself with effective altruism, a movement that examines how money can be used to help as many people as possible. His public argument was simple. He could make billions and eventually give much of it away. But Alameda had a problem. It needed access to cryptocurrency exchanges. Existing platforms were often unreliable, poorly designed, or difficult for professional traders to use. So Bankman-Fried and Gary Wang decided to build their own. FTX launched in 2019. The name stood for Futures Exchange. The new platform offered sophisticated crypto products and moved quickly. Alameda became one of FTX's first and most important traders. This created an immediate conflict. FTX was supposed to operate a marketplace. Alameda was trading inside that marketplace, and both were controlled by Bankman-Fried and a small group of associates. To customers, however, FTX appeared to be a separate and rapidly growing exchange. It attracted traders with low fees, advanced features, and an expanding selection of products. It also issued its own cryptocurrency token. The token was called FTT. FTX offered benefits to customers who held it. As demand for the exchange increased, the market value of FTT also rose. That rising price created wealth on paper. FTX controlled much of the token's supply. Alameda held large quantities of it. The two companies could treat those tokens as valuable assets, even though selling a large amount could cause the price to collapse. For the moment, that weakness remained hidden. FTX kept growing. Bankman-Fried became the public face of the company. He appeared at conferences in shorts and a t-shirt. His unpolished appearance made him seem different from a traditional Wall Street executive. He spoke about regulation, philanthropy, and the future of finance. Powerful investors embraced the story. FTX raised hundreds of millions of dollars from major venture capital firms and institutional investors. In January 2022, investors valued the company at $32 billion. The FTX name appeared on a Formula One car. Major League Baseball umpires wore its logo. The company paid for the naming rights to the Miami Heat's arena. Celebrities promoted the exchange. A Super Bowl advertisement featured comedian Larry David. The message was that cryptocurrency represented the future, and that ignoring FTX might mean missing it. Bankman-Fried's influence spread beyond advertising. He became a major political donor. He met lawmakers and testified before Congress. During the crypto market crash of 2022, he financed or attempted to rescue struggling companies. He was portrayed as the industry's responsible billionaire, the person who might save crypto from itself. Behind that image, FTX and Alameda were becoming dangerously entangled. When FTX was first created, it had difficulty opening bank accounts. Some customers who wanted to deposit dollars were therefore instructed to send money to bank accounts controlled by Alameda. Those deposits were supposed to be recorded as money owed to FTX customers. But according to evidence later presented in court, Alameda spent funds that had come from FTX customers. The trading firm used the money for investments, loan repayments, and other expenses. The problem expanded as the companies grew. Alameda also received privileges that ordinary traders did not have. FTX's software allowed it to maintain a large negative balance. It could withdraw money even when it did not have enough assets in its account, and it was largely protected from the automated liquidation procedures that normally closed a customer's position before losses became too large. Gary Wang, who wrote parts of FTX's computer code, later testified that these privileges have been created at Bankman-Fried's direction. Wang pleaded guilty and cooperated with prosecutors. By 2021, Alameda was withdrawing billions of dollars from FTX. Customers could still see assets listed in their accounts, but some of the property needed to honor those balances was no longer sitting safely at the exchange. It had been deployed elsewhere. This arrangement might continue as long as customers did not all ask for their money at once. Then the crypto market turned. In 2022, prices collapsed. Several major crypto companies failed. Lenders that had provided money to Alameda wanted to be repaid. According to testimony at Bankman-Fried's trial, Alameda used billions of dollars from FTX to meet those obligations. Its own investments were difficult to sell. Much of its apparent wealth depended on tokens connected to Bankman-Fried's businesses. That included FTT. The empire looked enormous, but much of its foundation was made from assets the empire itself had created. Inside Alameda, executives understood the danger. Caroline Ellison had become one of Alameda's chief executives. She later pleaded guilty to fraud and conspiracy charges and testified for the prosecution. Ellison said she prepared alternative versions of Alameda's balance sheet in 2022. One version revealed billions of dollars borrowed from FTX customers. Another presented the company's position in a less alarming way. Ellison testified that Bankman-Fried selected the version that concealed the full scale of Alameda's reliance on FTX. Bankman-Fried denied intentionally stealing customer money. At trial, he maintained that he had believed Alameda was permitted to borrow from FTX and that he had acted in good faith. He acknowledged serious management failures, but rejected the prosecution's claim that he had designed a criminal fraud. The outside world still knew almost none of this. Then, on November 2, 2022, CoinDesk published a report based on a private Alameda balance sheet. The document showed $14.6 billion in assets as of the end of June, but a striking portion consisted of FTT and other tokens connected to Bankman-Fried's companies. The report did not, by itself, prove that customer money was missing. It exposed something else. Alameda's financial strength appeared heavily dependent on an asset issued by FTX. If confidence in FTT disappeared, Alameda's collateral could collapse with it. 4 days later, Binance chief executive Changpeng Zhao announced that his company would sell its remaining FTT holdings. Binance had once invested in FTX and had received tokens when it exited that investment. Zhao cited recent revelations and said Binance would liquidate its position. Ellison publicly responded that Alameda was willing to buy the tokens for $22 each. The offer was meant to calm the market. It had the opposite effect. Traders wondered why that price mattered so much. Customers began withdrawing money. The run accelerated. Approximately $6 billion was requested in just 72 hours. FTX could not meet the demand. On November 7th, Bankman-Fried wrote that a competitor was spreading false rumors. He said FTX was fine. He said customer assets were fine. Those assurances were soon deleted. The following day, FTX stopped processing many withdrawals. Bankman-Fried turned to Binance for help. Binance announced a non-binding agreement to acquire FTX, subject to an examination of its finances. For a few hours, it appeared that the crisis might be contained. Then Binance looked at the company's books. It walked away. Binance said the problems were beyond its ability to help and cited reports of mishandled customer funds and government investigations. FTX needed billions of dollars almost immediately. No rescue arrived. On November 10th, Bankman-Fried publicly apologized. He said he had made mistakes and should have done better, but he continued to describe the disaster largely as a liquidity and accounting failure. On November 11th, FTX, Alameda, and more than 100 affiliated companies entered bankruptcy proceedings. Bankman-Fried resigned. The $32 billion empire had collapsed in little more than a week. John Ray III became FTX's new chief executive. Ray had decades of experience restructuring failed companies, including work connected to Enron. His first assessment was devastating. He told the bankruptcy court that he had never seen such a complete failure of corporate controls or such an absence of trustworthy financial information. The company lacked reliable records. Control was concentrated among a small group of inexperienced executives. Corporate money had been used to purchase homes and other personal items for employees and advisors. The new management could not immediately determine how much cash the businesses possessed. The collapse now had two separate stories. One was the bankruptcy. Investigators had to locate assets scattered across companies, wallets, investments, and jurisdictions. The other was a criminal investigation. On December 12, 2022, authorities arrested Bankman-Fried in the Bahamas. The United States accused him of defrauding FTX customers, investors, and Alameda's lenders. He was extradited to the United States and initially released on strict bail conditions. Meanwhile, members of his inner circle began cooperating with prosecutors. Caroline Ellison and Gary Wang pleaded guilty. So did FTX engineering executive Nishad Singh. Their testimony would provide the government with a view from inside the companies. In August 2023, a judge revoked Bankman-Fried's bail after finding probable cause to believe that he had attempted to tamper with witnesses. He was taken into custody. His trial began that October in Manhattan. Prosecutors described FTX as a fraud built on a simple deception. Customers had been led to believe their assets were secure, but billions had been transferred to Alameda and used for other purposes. Ellison testified that Bankman-Fried directed her to commit crimes. Wang described Alameda's special access to FTX's systems. Singh testified about discovering the enormous financial hole and confronting Bankman-Fried. The defense argued that Bankman-Fried had made mistakes while running a fast-growing group of companies in a chaotic industry. His lawyers challenged the cooperators' credibility. Those witnesses had admitted their own crimes and hoped their assistance would reduce their sentences. Then, Bankman-Fried took the stand. He said he had not defrauded anyone. He described himself as an overwhelmed executive who had failed to install adequate risk controls. He said he believed Alameda had the right to borrow from FTX under certain conditions. He also said he had not fully understood how large Alameda's debt had become. The jury did not accept that explanation. On November 2, 2023, exactly 1 year after the balance sheet report that helped trigger the collapse, Bankman-Fried was convicted on all 7 counts presented at the trial. The convictions included wire fraud, conspiracy, and money laundering conspiracy. These were not unresolved allegations. They were criminal findings reached by a federal jury. In March 2024, Judge Lewis Kaplan sentenced Bankman-Fried to 25 years in prison. The judge found that customers had lost approximately $8 billion at the time of the collapse. FTX investors and Alameda lenders had also suffered billions in losses. Bankman-Fried's defense had requested a much shorter sentence. His attorneys pointed to assets recovered in bankruptcy and argued that customers were likely to receive substantial repayments. Bankman-Fried apologized for what customers had endured, but the judge said he had not shown genuine remorse for his crimes. The legal reckoning extended beyond the founder. Ellison received a 2-year prison sentence after cooperating extensively with prosecutors. Ryan Salame, another FTX executive who pleaded guilty in a separate case, received a sentence of 7.5 years. Wang and Singh avoided prison after judges considered their cooperation, although both received other penalties and supervision. The bankruptcy produced an outcome few customers initially expected. Investigators and restructuring professionals recovered cash, cryptocurrency, and investments. One particularly valuable asset was FTX's early investment in the artificial intelligence company Anthropic. Rising cryptocurrency prices also increased the value of property recovered by the estate. FTX's reorganization plan took effect in January 2025, and distributions began. But repayment came with an important limitation. Customer claims were generally valued in dollars based on cryptocurrency prices around the time of the November 2022 bankruptcy. For someone who had held Bitcoin or another asset that later increased dramatically, Receiving the dollar value of the old claim was not the same as receiving the missing cryptocurrency back. Many creditors were eligible for interest under the plan, yet some customers remained frustrated by the years of lost access and the gains they had missed. The distribution process was also complicated by identity checks, tax forms, disputed claims, and restrictions in certain countries. As of July 2026, the Recovery Trust was still processing claims, with another distribution scheduled for July 31st. The company that customers once trusted as an exchange now existed primarily to recover and return assets. Bankman-Fried appealed his conviction and sentence. He argued that the trial had been unfair and that he had been prevented from fully presenting evidence supporting his belief that FTX could repay its customers. In June 2026, the United States Court of Appeals for the Second Circuit rejected those arguments. The appeals court upheld both his conviction and his 25-year sentence. He may still pursue further legal options, but his conviction remains in force. FTX did not collapse because cryptocurrency suddenly stopped existing. It collapsed because a centralized business held customer assets while operating with extraordinary conflicts of interest and almost no meaningful internal control. The technology looked new. The failure was ancient. Customers believed numbers displayed on a screen represented property waiting for them. In reality, some of that property had been sent into a private network of trading positions, investments, loans, donations, and purchases. The recovery of billions does not reverse that breach of trust. It demonstrates how much value remained scattered across the empire, and how long victims had to wait while professionals reconstructed what its leaders had done. FTX became a warning about charisma, prestige, and borrowed credibility. Famous investors participated. Celebrities advertised it. Politicians met its founder. A high valuation made the business appear validated. None of those things proved that customer assets were protected. The most important question was always the simplest. Where was the money? By the time millions of customers began asking, it was already too late. Stories like FTX reveal the hidden decisions behind powerful companies, and the cost when trust replaces verification. Subscribe if you want to uncover more of them. Stories like FTX reveal the hidden decisions behind powerful companies, and the cost when trust replaces verification. If you want to uncover more hidden business strategies, controversial decisions, and the secrets behind the world's most powerful companies, please subscribe to the channel.